Andrew Holland is here with me from Avendus. Andrew, of course, is someone who has seen cycles for a very long time. Andrew, the levels of that circuit down day, the 13th of March day, are also giving way. 5% Nifty. Where do you see this heading? And what do you make of this sudden acceleration in the selling which has come in the last half of 45 minutes of trade?
So I think there's two factors. One is that obviously overnight, whilst globally we saw a lot of fiscal and monetary packages, the world is thinking it's not enough, and you had the US saying that if we don't do something quickly, the jobless rate could go to 20%. Now these are scary facts and figures which the market's trying to grapple with. But certainly, I don't think there's enough been done. And obviously, the risk now is that they have more cases in the UK and the US and so forth. And then there's obviously worries about where we are in India, what's our situation, and could that accelerate? So you've seen again a global sell-off starting in Asia. It's followed through here, and I think we're all just wondering, where we can start thinking about the negative side will come to an end, and I don't think we're there yet. So that's what the market's trying to work out is where's the bottom, and because we don't know where earnings are and we don't know the kind of global impact at the moment. Everyone's just fearing the worst, and when you fear the worst, then people just say, I'll take money off the table, whichever asset class it is. It's not just equities. It's happening across all asset classes, and just sit on cash.
Andrew, stay with me. I'd like to talk to you about valuation and market fundamentals, but another big voice, Amisha Vora of Prabhudas Liladhar is also with me on the phone line. Amisha, how are the interactions with some big HNI clients happening? Are they selling too? We are seeing big FI number from FI community so far. How are the big HNIs approaching this market? Have they started nibbling or completely stay away right now?
So it's like this. Those who are fully involved and who are ultra HNI, I think they were all invested. And because of this steep correction, I don't think anybody's sitting on a good cash. And in the first correction, while this spread was not so much across the world, they already deployed the balance cash. So according to me, it's just...
Fair point. She was making a point that bulk of the big investors are already quite nicely committed in the market. So additional buying in the market, at least on the HNI, ultra HNI, may be a bit difficult. Andrew, what would you like to say among the big clients you interact with? How are their commitment levels? How are the flows? At least from the... because FIs are selling, DIs are buying. At some point in time, perhaps DI money will exhaust itself out.
Listen, you're going to get some. You are going to at some point have an up move in the markets, and you've got to. I think what you need to do is really think about it like this: is that we don't know where the valuations are correct, because you don't. If you talk about PE to me, I don't know the E in the PE. I don't know what earnings are going to be, and I think that's the problem. So what you can do is take a haircut to a lot of your earnings and just say, okay, if what we're seeing in terms of the global events and what's slowing down in India is going to continue to June, take a haircut on your earnings, see what the PE is, and see a couple of things. One, is it to where we were back in 2008 when we had the financial crisis? And if so, or is it lower? And if it's lower, is it discounting something which could say that it's going on until September? That's where you're going to find the value in trying to do some exercises. But I don't think anyone's got the nerve at the moment to kind of say this is the time. I think people have been nibbling away, and they keep seeing the markets kind of retracing most of that. As we've seen and as you mentioned at the beginning. So I think people will sit on the sidelines a little bit now and just wait to see what else is coming out. Because, I'm sure you're commentating on as well, in that there's a lot of rumours going around, there's a lot of worries about the banking industry. So, let the dust settle, it will. All of it can't be true. And then you can look at some of those stocks in the financial sector and say, okay, this is good value now. I need to be buying this or nibbling away at it.
In fact, Amisha is back with us. Amisha, you were making a point earlier that bulk of the HNI, ultra HNI community as an investor is quite nicely committed already. So incremental buying from that side is difficult to come by.
Correct, exactly.
Talk to us about how previous slowdowns have been. You've been around again for a very long time. Where do you think this, this kind of selling exhausts itself?
So I think, it can definitely get exhaust, but there are certain levels which we have seen in the past. Don't know if this time it will get checked, but most of the time we know either real economy has impact on the markets and going forward, the markets itself, the wealth erosion itself has huge impact on the real economy also. And when these vicious circle starts, typically the PEs can get corrected on a market levels between 15, 16 trailing also. We are still at maybe 18, 19 trailing. I'm not going forward because forward is all hazy at the moment. So on a trailing basis, I'm talking. So, and in terms of comparison, when you made to some of the other markets, the correction in India was little lower. And of course, the spread is also lower. But right now, my feeling is even if the spread is lower, the fear is as high and consumption will get impacted. Exports will get impacted. And one needs to see over next 1 month, 1.5 months, how we are allowing and taking care of the solvency of a lot of firms, individuals, and in turn, how the whole asset quality cycle is being taken care of. What steps are we doing? So, but the way it is looking, before the huge downside can happen in real economy, the financial market corrections will also have its telling impact on the economy.
Let's talk about the valuations, Andrew. I was just looking at Nifty actual last 12 months earnings, 430 rupees a share. If the market is expecting absolutely no growth and a bit degrowth as well in the system for the full year, do you think that's a fair estimate? Can we do 410, 420 kind of EPS, and that's why market is being sold off? What kind of adjustment is this happening on the valuation front in the market?
So that's it's a good point you're making, and it's what I was trying to say is that I can give you many different scenarios, but I would have thought that we're only starting with the earnings growth. So I think most brokers were beginning of the year were for a 20 to 25% EPS growth. Now that's zero. I suspect it's going to be negative because this coming quarter is going to be terrible. So therefore, what is the E to give you a valuation? And that's why I said, if you do an exercise of saying what's the worst case, look at each individual stocks and see where it looks in history and to where you think things might, if you took a worst case scenario of things going into September in terms of global factors. Obviously, you could take a different view in terms of where you think the share price should go from here. So I think those individual stocks should be looked at rather than just the market as a whole, because if we are going to head to some more problems and if we don't kind of allay some of the fears and have bankruptcies and then the NPL non-performing loans start to increase again, then there's no earnings coming back to the banking sector. That's for sure. So, and that was one of the big levers for earnings growth this year. So, you've got to look at the whole thing and say, where's the value within the sector? The sector is going to take a lower or even negative earnings growth, and it's therefore, which of the stocks which still show value even after you've done, you've done that exercise. So I think that's important.
Amisha, if there is one small section of the market which indeed was not very adequately invested in equities as an asset class, or the commitment was very low, if that end of the market is keen to start coming in, Because, we did see some of the brokerages, Zerodha, for example, was sharing a data that the fresh retail accounts are actually rising. If that is indeed the case, that some people are keen to come to the market with this crash, how should they go about buying? Should they be buying large caps or a basket or any particular area which you think has started to turn quite interesting?
So, of course, they will have to focus on large cap, I feel, because large cap, there is a huge discount sale available. The all-time bellwether, the HDFC Duo itself, when have corrected so much, I think there's no need to go too far to search for a model which can last 5 years from now and still can grow the basics. So I think, yes, it should be large cap. And also I feel that there are, as what you said, Zerodha is one set of clients, but there are also set of clients who had the feeling that they had missed out last run quite a lot. Even those clients are coming in, but those are not that blue-blooded ultra HNIs with very large appetite or large capacity which can change the trend of the market. But yes, looking at the way markets are falling, it is so very evident that this is not going to end with 1,000 points fall every day. And a lot of people like that are joining and buying some of the companies. But of course, they are focused absolutely large cap.
Andrew, we have completely, kind of come into the middle of the bear market, that too quite swiftly. What are your thoughts? How long can it last? What kind of action would you like to see from the authorities' side?
So I think, I think there's, you try and think about what's happened previously and how can you put some sense around it. So, if you think about lockdowns in terms of, economies, then obviously, 9/11 comes to mind. That happened over a 2 to 3 week period. And obviously everything was a standstill. And there was fear there, right? There was fear of going out and doing. So you can put that kind of timeline around, what's happening now. I think the biggest problem here is that, you weren't shutting down whole industries and companies at the same time. And that's the difference. And I haven't been in markets where that's happened, or tried to be thinking about it, economic growth in any of those circumstances. So it's new territory, and I think we're going to have to step through it. But we're going to have to be, what I think the authorities have to do is guide us through the way. And I'm sure there'll be a number of countries who just say, listen, I'm going to shut the stock market. I'm just going to shut everything. I'm going to try and get past this virus as much as I can in terms of getting past the worst, and then do the appropriate action for my citizens, for the companies, and the banking system to get things moving again. Because I think we're all looking at a moving target which we don't understand, and I think that's the biggest problem. I mean, if you go back a month ago, most global economists were saying that this damage is going to be 0.2% to the global economy. Now, I'm also talking about recession. That's how quickly we've moved. So I wouldn't be surprised if you see a number of countries take that step to protect to protect capital. But obviously, it has this kind of cascading effect on companies with debt, and you just need to stop that and stabilize it. And I think a number of countries might do this.
Right. All right, Amisha and Andrew, both of you, thank you so much for joining for the discussion